The U.S. economy could face a considerable recession if Donald Trump is elected president. That's one of the conclusions of a new analysis of Trump's economic policies by Moody's Analytics. The report's lead author is Mark Zandi, the firm's chief economist. He joins me now from Westchester, Pennsylvania. Mark, we reported on this study earlier this week. Other news organizations did as well. And the Trump campaign responded by pointing out that you're a registered Democrat. You've given some money to Hillary Clinton and some other Democratic politicians, basically suggesting this analysis might be biased. So why don't you tell us your response to that?
Well, I've worked on both sides of the aisle. I was on the John McCain campaign back in 2008. I was an economic advisor. But, I guess more substantively, this is a study done by a team of economists. I led the team, but it's a team. The team has folks from both sides of the aisle, some of whom have contributed to Republican candidates. And, it's an open book. It's transparent. If you want to see what we did and take a look, you're more than welcome. The study's pretty transparent, and I'll provide even more information if you want it. So, you make your own judgment as to the merits of the study.
So why don't you outline the conclusions of the study? You basically looked at three different scenarios. One, if Trump's policies get enacted in full. Another scenario you called a Trump light scenario, where his policies are dialed back. And then a third scenario. Why don't you just go through those and tell us what the outcome of your analysis was?
Yeah, sure. So the first scenario is Trump at face value. We took his policies as he's articulated them, and no change. And just to provide a little color, we focused on three policies that we could get enough information for to do the analysis. That's tax and spending. Second is immigration. And third is trade policy. He's advocating higher tariffs on Chinese and Mexican imported products. So if you take his proposals as is, no change, we would have a recession, and it would be a long recession, and it would mean that at the end of his term, the economy would be smaller. GDP would be lower, be fewer jobs, unemployment would be higher. It would be pretty tough.
Under that scenario, what are the major things that cause a recession?
All three of the things I mentioned contribute. So tax spending, largely because of the size of what he's proposing. He's proposing tax cuts on a static basis, not considering the effects of the economy, of $9.5 trillion over 10 years. And he's articulated very few spending cuts. You get very large budget deficits, which are a very significant corrosive on the economy going forward. The second is trade policy. So if you raise tariffs on Chinese and Mexican imports, and by the way, those are the two largest providers of imported product in the United States, you cause prices for those things to rise. That undermines people's real income, their purchasing power, and that hurts the economy. And then immigration, well, there he's asking 11.3 million undocumented immigrants to leave the country. We assume that happens over a long period of time and is done through an e-verify process, but that means that the labor force going forward is a lot smaller. It means the economy is a lot smaller. So all these three things combined, conflate, and create this pretty noxious economic environment.
So I'll summarize those other two scenarios. Basically, the effects are not as bad if those policies are reined in, let's say when they go to Congress, for instance. But you've also said you're going to do an analysis of Hillary Clinton's economic proposals. Can you give us any glimpses into what you think that analysis will show and when it's coming?
Yeah, well, it's coming the week of July 18th. So that's, 3-4 weeks from now. So we're just really getting into it. So, no, I really can't give you a sense of that at this point. The one thing I will say is her proposals are much more detailed. I mean, if you just go to the websites, you can get a sense of that.
Right.
And there are a lot more moving parts in her proposals. So it's taking a lot more work to work through them, just because they're more complicated and there's just many more proposals.
So, Mark, the reason we're talking about this is because both candidates are trying to come up with convincing ways to sort of jumpstart a fairly stagnant economy. If you could just tick off, I know none of this is simple, but if you could just tick off a few of the best ideas for actually making the economy grow more, what might those be?
I'd say tax reform would be at the top of the list, but tax reform that's deficit neutral. So bring down marginal rates for businesses and individuals, small businesses, but pay for that by eliminating or scaling back deductions, credits, preferences in the code. Make it simpler code, but use that revenue to pay for the lower marginal rates. Second, I think infrastructure spending is like vitally key here. We are underinvesting. In fact, if you consider depreciation of the infrastructure, we're not investing at all. And so this goes to productivity of our businesses and just our standard of living. And it makes perfect sense in the context of such low interest rates. You can almost pick any infrastructure project you want. It's going to have a higher return than a 2% 10-year Treasury yield.
Yeah.
So that's very key. And then immigration policy. We need our biggest problem going forward is not going to be unemployment. It's going to be a very significant lack of labor. We're going to have a very tight labor market because of demographics, the aging of the population and the retirement of the boomers. So we need a rational immigration policy that allows a lot more skilled and educated immigrants into our country. You do those three things, and that would be a big plus for the economy.
Last thing, what's your best estimate of the state of the economy on Election Day in November, and which candidate is it most likely to favor?
Well, if you take the economy as a whole, it should be pretty good. I mean, we're pretty close to full employment. The unemployment rate's 4.7%. We're still creating lots of jobs. So the labor market's pretty tight. Wage growth is picking up, and that'll be more, I think, evident as we approach the election. So, if you look at the entire economy, I'd say pretty good. Should, favor Hillary Clinton. But, underneath, there's still a lot of disparity. High-income folks are doing fabulously well. Low-income folks, not so well. And that, I think, goes to, some of the support that we're seeing for Donald Trump. So, depending on what prism you use, you can see two different economies. But in general, in aggregate, the economy is doing pretty well.
Mark Zandi, thank you very much. Folks, let us know what you think. What do you want to hear the candidates talking about when it comes to the economy? Tell us in the comments section below, or look us up on Facebook and Twitter at Yahoo Finance.